Starting a business does not cost what most people think. For one category on this list, a few $100s is genuinely enough to get started. For another, you need capital that most people will never accumulate. We ran the real numbers across 5 types of businesses. The gap between the cheapest and the most expensive starting point is over $2 million. The question we are answering: how much does it actually cost to start a business? We are tracking realistic launch costs, not theoretical minimums, and not the version where you register an LLC and call it a company. We analyzed 5 types: a service business, an e-commerce store, a brick-and-mortar location, a franchise, and a technology startup. Each one has a different cost structure, a different risk profile, and a different timeline to profitability. All figures come from the Small Business Administration and the International Franchise Association, verified against published industry data from the National Restaurant Association. These are realistic ranges, not theoretical minimums. Your actual costs depend on your location, your market, and what you are building. This content is for educational and research purposes only and is not financial advice. A service-based business is the cheapest category on this list because you sell expertise directly to clients with no inventory and no physical location required. Freelance consultants, graphic designers, copywriters, and bookkeepers all fit this model. The product is knowledge or labor, not physical goods. Here is what it actually costs. A business entity registration runs between $50 and $500 depending on the state. Basic accounting software costs between $20 and $50 per month. A simple professional website, which is useful but not mandatory, costs between $100 and $300 to set up in the first year. The total first-year cost to launch a service business at a professional level runs between $1,000 and $3,000. Much of that is optional infrastructure, not mandatory spending. The path to profitability can be very fast. A consultant who lands a first client in month 1 and invoices $2,000 is already covering startup costs on that first payment. That math does not exist anywhere else on this list. The one hidden cost most people underestimate is time. Prospecting for clients and building relationships consumes hours that produce no immediate revenue. That time has real value even when it does not appear on a balance sheet. An e-commerce store is the next step up in both complexity and cost. The model sounds simple. Source a product, build an online store, and sell it. The actual cost to execute at a level where real revenue is possible is higher than most startup guides suggest. The platform cost is predictable. Shopify's basic plan runs about $40 per month, which is roughly $500 per year. That covers the storefront, but not what fills it. Inventory is where the spending begins in earnest. A realistic starting order from a supplier in minimum quantities for a small catalog runs between $2,000 and $5,000. That figure does not account for inventory that does not sell. Product photography and branding, handled by freelancers rather than an agency, runs between $500 and $2,000 depending on the scope. These costs are not optional if you want products that actually convert. Paid advertising is the variable that most first-time founders underestimate. A realistic testing budget for paid social ads before identifying a profitable campaign runs between $1,000 and $3,000. Some founders spend more without finding a formula that works. Total first-year cost for a functional e-commerce store between $5,000 and $12,000. The stores that skip advertising tend to produce very few sales in year 1, regardless of product quality. This category has a longer path to profitability than a service business. Most e-commerce stores take between 6 and 18 months before consistently covering their costs. The businesses that survive typically treat year 1 as a testing phase, rather than an immediate revenue phase. A brick-and-mortar business is the most capital-intensive category on this list for first-time entrepreneurs. We are using a coffee shop as the reference point because it is one of the most commonly launched independent retail concepts in the United States. The National Restaurant Association estimates that an independent coffee shop costs between $80,000 and $300,000 to open. That range reflects the difference between a small neighborhood counter and a full-service cafe with a kitchen. Here is where the money goes. Commercial lease deposits typically require the first and last month plus a security deposit. In a mid-tier city, that upfront payment runs between $15,000 and $30,000 before a single customer is served. Equipment is the next major line item. Espresso machines, grinders, refrigeration units, and a point-of-sale system cost between $20,000 and $50,000 for a quality setup. Used equipment can lower this number, though reliability becomes a variable. Renovation costs depend heavily on the state of the space you lease. A location that needs full build-out runs between $30,000 and $100,000. Permits and health inspections add several $1,000s more regardless of the space's condition. Working capital to cover the first 6 months before the business reaches break-even adds between $30,000 and $60,000 to the required funding. Most advisors recommend having this capital available before opening day. The total to open a modest independent coffee shop in a mid-tier city runs between $80,000 and $160,000. That figure rises significantly in higher-cost markets. The industry statistics on this category are not encouraging. Approximately 60% of new food and beverage businesses close within the first year. The businesses that survive typically have a strong location, an owner who works the floor in the critical early months, and a break-even number calculated before the lease is signed. A franchise gives you a proven operating system and a recognized brand. It also provides structured support that most independent businesses lack. The cost reflects all of that value. We will look at two well-known examples that represent different ends of the accessible range. McDonald's is the world's largest franchise system by revenue. New franchisees purchase existing restaurants rather than building new locations. The total investment runs between $1 million and $2 million, depending on the location and the restaurant's condition. McDonald's also sets minimum qualification requirements. Applicants must have at least $500,000 in liquid assets that are not borrowed. The franchise fee itself is $45,000, which is an upfront cost on top of the total investment range. Subway represents a more accessible entry point. The total investment for a Subway franchise runs between $200,000 and $500,000. The franchise fee is $15,000. That lower barrier makes Subway one of the most commonly purchased franchise agreements in the country. In both cases, the ongoing fee structure continues for the life of the agreement, which typically runs 10 to 20 years. Royalty fees for most franchise systems run between 4 and 8% of gross monthly revenue. Marketing contributions typically add another 1 to 4% on top of that. The performance data supports the franchise model. The International Franchise Association reports that franchise businesses have a 5-year survival rate that exceeds independent businesses in comparable categories by a meaningful margin. You are paying for reduced uncertainty, not just a recognizable name. If you have the capital and prefer a proven system, a franchise is a legitimate path. If you want full ownership without ongoing royalties, the math points toward the independent route. A technology startup is the category with the widest cost range on this list. The answer depends almost entirely on the founder's technical background and whether a team is required to build a product. A solo developer with existing skills can launch a software product for almost nothing. Domain registration, cloud hosting, and basic development tools cost under $100 per month. In the early stage, the cost is almost entirely time, not money. That changes once hiring begins. A single software engineer in most US markets earns around $120,000 per year in base salary. That figure does not include payroll taxes or benefits. A founding team of 3 people, each taking a reduced early-stage salary, burns over $200,000 per year in labor costs alone. The realistic first-year cost for a tech startup that requires a team runs between $50,000 and $200,000. That range assumes a small team, controlled hiring, and founders who are taking below-market compensation while the product is being built. Marketing and distribution costs compound the total once the product is ready. Many software companies describe customer acquisition as their largest ongoing cost after payroll. Paid advertising, content production, and early sales development all require budget before they produce returns. One distinction worth making: the venture-backed startup model is not representative of most successful technology businesses. The majority of durable software companies were bootstrapped or raised small amounts from individual investors rather than institutional funds. If you have technical skills, this category has the lowest dollar barrier to entry on the entire list. The challenge is not building the product. The challenge is finding customers who will pay for it. Here is the comparison across all 5 categories, using realistic midpoints from each cost range. A service business requires roughly $2,000 to launch professionally. An e-commerce store requires roughly $8,000. A brick-and-mortar location requires between $80,000 and $160,000, with the exact figure depending on market and build-out scope. A franchise requires between $200,000 and over $1 million, depending on the system. A tech startup with a team requires between $50,000 and $200,000 in the first year. The cost alone does not tell the full story. What matters is the cost in relation to how quickly the business can generate revenue. A service business at $2,000 can reach profitability in the first month. A coffee shop at this investment level typically needs 2 to 3 years to reach break-even, and that assumes it stays open. The businesses with the lowest startup costs tend to have the fastest path to self-sufficiency. The businesses with the high startup costs require a longer runway and a stronger tolerance for delayed returns. The right category for you depends on 3 things: your available capital, your existing skills, and how long you can operate before needing the business to support itself. Those variables, more than any other factor, determine which type of business you can actually build and sustain. We covered 5 real business types with the actual numbers behind each one. If this breakdown was useful, subscribe to the channel. We publish financial simulations and data-driven breakdowns every week. Drop a comment with the type of business you are considering or with the topic you want us to run the numbers on. We read every one.